Welcome to Beyond the SEAF Model. I'm Jack Kosar, and this is effective for the week of September 2nd, 2024. Let's get started. SEAF signals for this week, we have XLF, XLRE, and XLV, financials, real estate, and healthcare. Financials coming in strong with ones across the board at 3. And real estate and healthcare kind of not leading in any particular category in any particular time period, but showing strength across all 3 with a ranking of 10 and 12 respectively. Utilities comes out after being a SEAF signal for a while with a trading week of 9. Still showing strength in the tactical month and strategic quarter, but falling just outside the top 3. The way we back tested the SEAF model, we showed that top 3 allowed for not only the best performance, but allowing us to kind of grab the best sectors as they came through. It back tested the best. We back tested a bunch of different iterations on SEAF. Top 3 came through. So as a kind of little gentle reminder, SEAF model takes the top 3 each week. Coming in at the bottom, technology slide continues. Trading week of 11, strategic quarter of 10. Seeing a little bit of rebound from energy, but we'll break that down a little bit more in the heat map. And then dead stop on consumer staples, going from having a relatively decent strategic quarter and tactical month to a 10 in the trading week. Looking now at our heat map, financials, one across the board, real strong. Everything else is showing a little bit of, the flows are weakening a little bit. I think we can kind of chalk that up to the S&P 500 is approaching its support level at 55.66, and I think there's a little outside of financials. Seems to be a little bit of hesitancy on putting on bigger bets. 8 of the 11 sectors on the trading week are trading had a movement of less than 10%, either positive or negative. Consumer staples at 0.17 outflow, and technology at a 0.45 negative 0.45 outflow. Financials showing really strong. Probably say this pretty frequently, but the average on a trading week, positive or negative, is about 0.4 for the leading, for the top and for the bottom. Financials coming in at a positive 0.56, so a very strong move for financials. Just for context, 2 was energy on the trading week at a 0.1% increase. So like I said, a little bit of indecision seemingly correlated with the S&P 500 being on support. So kind of looking for next week for any conviction to see if we've gone through that support or we've bounced off of it. But as of right now, real strong numbers coming into financials, real strong numbers leaving technology, and on the trading week kind of middling in between. Overall, though, we are seeing that green clumping up top, which is what I like to see from the model, seeing these kind of the momentum from all 3 time periods, which is definitely what we're seeing. Heading into our rainbow charts, I like to highlight not only the positive aspects of the model, but on the flip side, when there's money flowing out, we can see some opportunities there as well. Looking at technology peaked at favored, is now down in a void. It is our most worst ranked sector out of the 11 sector spiders, and we are seeing that corresponding move in relative underperformance. We had the big downward move as we hit a void toward the end of July, and now that we are in September, we are kind of heading in that territory again, and we are seeing the corresponding move in relative underperformance versus SPY. Similar for consumer discretionary, a bit not as aggressive as technology, but money not flowing out of consumer discretionary at the same rate that we're seeing it flow out of technology. We are sitting in that void. We have actually been in a relative downtrend for consumer discretionary, going back almost a full year, but really starting in December of last year, with little spurts of relative outperformance on the short term, but broadly we're seeing the broader trend of relative underperformance on consumer discretionary as money flows out. Again, we are seeing not the same aggressive move that we saw for technology, but we're also not seeing the same kind of outflows. So we're seeing a lot stronger outflows out of technology than we are consumer discretionary. Kind of highlights to why that heat map is important. Strength of flows over 3 time periods or in multiple time periods seems to correlate a little bit with the aggression of the relative underperformance. Heading to the positive end of things, real estate is a SEAF signal. We are seeing some, we've seen this positive trend in relative outperformance, kind of as we have, broadly touched and avoid, but really going back from the early part of July to now, as we are climbing up, seeing that nice relative outperformance. Would be only speculating, but with the Fed anticipating some rate cuts, being in real estate, as we're seeing the flows come in, seems to be a positive thing. Heading into healthcare. Healthcare is also our SEAF signal, as a third signal for this week. We are seeing a nice outperformance trend as we have broken through neutral into this favored. It has not been straight up. It has wavered a little bit into neutral, as we can see at this slight slide in the middle of August. But as healthcare continues its relative outperformance trend going back from July, SEAF is picking this up as we are now climbing into favored. Financials. Financials is our leader. It is the top rank that you can be, with 3 across the board. So we are up at the top of our range for favored. And I'm actually going to have to adjust this chart here as we're growing our relative outperformance for financials. Been in financials for a bit now, seeing that nice relative outperformance coming up and testing relative performance highs here that we had in looks like about mid-April. So financials doing really strong. Again, money flowing into financials extremely strong on the trading week and strongly through all 3 time periods. So financials is a good place to be, and it is our top SEAF signal. Last but not least, we were in utilities for a little bit, so just kind of wanted to highlight what's going on here. Utilities is technically still favored, a bit not a SEAF signal. And what we're seeing here is, as it is weakened, we have definitely flattened out in the relative performance. The reason I bring up utilities, with it being 2 in the tactical month and 2 in the strategic quarter, theoretically, a couple of strong weeks of trading weeks could vault this thing back up. But as of right now, we are seeing money flowing out of utilities a bit slowly. So we are about flat on relative outperformance. And I just wanted to highlight that, as we had been in utilities for quite a bit of time. Definitely picked up some nice relative outperformance on that trade. We are middling here. It is favored in the sense that it has 2 strong tactical month and strategic quarters. But we have seen 3 or 4 weeks in a row of relative weakness on the trading week for utilities. So unless something rebounds hard, utilities is kind of headed in that sideways direction, as it is pulling its momentum from its tactical month and strategic quarter. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week. And